Yeah.
No question. The dude is outrageously brilliant. And in essence, what he's saying is gold would need to be 12,600 to get to that. Well, and, James Rickard says 24,000. James Sinclair said 10,000. Now, these are all numbers that would require some form of a revaluation. If we just looked at history as an example, the last 25 years, gold has averaged 9.9% per year on average. It was up 30% last year. It's up way over that just in the few months. So to put a number on it would be nothing other than guessing, because there's so many things that could change that. An easy answer would be 10% higher. That's what it's average on par, on average, for 30 years. But I have a feeling something big is happening. And I will tell you, in 35 years of doing this, Jeremy, I've never seen anything like what's happening right now. Never, ever. So my guess would be higher than people think possible.
Over the past 5 years, the gold price has increased by more than 82%. Gold confirmed the start of a new bull market in 2024 that could last 5 to 10 years. Like the major breakout in 2006, which permanently left the $500 level behind, sub-$2,000 gold may never be seen again. In this video, AndySchectman, a veteran precious metals expert and president of Miles Franklin, according to him, gold has averaged a 99.9% yearly increase over 25 years. Currently, Schectman suggests a conservative 10% increase but feels something big is happening. AndySchectman notes that since November, the U.S. has become a net gold importer. He underscores J.P. Morgan's $4 billion gold delivery to COMEX and questions who has the capital to acquire such massive amounts. Trade disruption between the United States and Europe caused by U.S. President Donald Trump's tariff threats has led to a big shift in the gold market. The Wall Street Journal reported on Monday that leading global banks, including J.P. Morgan Chase and HSBC, are capitalizing on the price gap between the two markets by using commercial flights to ferry gold across the Atlantic. While reflecting on current dynamics, Schectman warns that despite a $920 million fine for metals manipulation, J.P. Morgan controls SLV and GLD, allowing potential gold confiscation through ETF shutdowns. However, he believes something bigger is at play, possibly related to monetizing the balance sheet or issuing treasury-backed gold bonds. In any way, recent discussions within the Trump administration have explored the possibility of monetizing the U.S. Treasury's gold reserves to address national debt and influence bond yields. In his analysis, AndySchectman discusses gold's potential value, referencing various market predictions. Now we present the clips of AndySchectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There's a fine line between conspiracy and reality, Jeremy, and I think we're treading that line. But just since November, since we have become net importers of gold rather than net exporters, the United States has brought in over 12.5 million ounces of gold and over 45 million ounces of silver from the London vaults into the U.S. vaults.
Yeah.
J.P. Morgan is set to deliver $4 billion with a B of gold into the COMEX for the February contract. And Blythe Masters, who used to run the trading desk for JP, you can Google it, it'll pop right up. She said long ago, JP Morgan does not buy gold for themselves, it's for customers. Now I ask you, what customers got $4 billion in their back pocket to buy gold with? Let that one sink in for a minute. And there are many other things related to JP Morgan. I might add just one more. You know, they paid a $920 million fine for manipulating the metals market. And it always chafed my rear end that they were allowed to continue to be allowed to be the custodian of the world's largest silver trust, SLV. I mean, that just didn't make any sense to me. They paid a $920 million fine, the largest fine ever handed out by the Justice Department at that point. And yet their trading desk made $1 billion that year. Slap on the wrist, you walk away 80 million up, and you still get control of the ETFs. HSBC Bank always controlled GLD, but guess what just happened recently? Oh, that's right. JP Morgan now controls GLD. So yeah, BlackRock and JP Morgan holding SLV and GLD. And when people have asked me over the years, do you think gold will be confiscated? I said, no, I don't. I think if they wanted to take the gold, if they wanted to have the lion's share of it, all they would need to do is say, let's take the ETFs. Now, nobody except the insiders can pull gold out of the ETFs. And I'll mention about that when I'm done. I know I'm kind of going a little further ahead of script here, but it's important. And so the insiders are the only ones that can take metal out of the ETFs. You and I can't. So if indeed they were to close those two accounts, be sitting on this massive stockpile of gold, where right now, in the two vaults that JP Morgan owns, one in London, one in New York, they possess more gold than over half of the dang G20 countries because of this custodianship. They could close those programs, look the world in the face and say, what? We didn't break any laws or infringe any civil liberties. We have the right to do this. We're closing the fund. The money that people had invested in gold is now in their money market accounts Monday morning. They're free to go buy physical gold and silver. It would give them the ability to have their cake and eat it too. Now, am I extrapolating? Yes. Do I know that this would happen? No, but it's a little bit uncanny. And along those same lines, since gold has been on this wild tear, right? It's a little weird that 16 tons have come out of GLD just recently, fallen out. In other words, the conventional wisdom is, well, it's a strong dollar, it's high interest rates, it's profit taking. I call BS again. It's the insiders redeeming their shares for the physical metal and pulling it out to have strategic control of it before whatever happens. So you put it all together, a tier one asset, the massive repatriation, net importers, $4 billion from JP Morgan, 12, all of these millions of ounces pouring in of gold into the New York COMEX market. All of this stuff happening, JP controlling GLD and SLV, I mean, under the guise of tariffs. Now, he's not going to tariff silver. He won't. It's a structural deficit. It'll blow up our industry. Is he going to tariff gold? Or is he just saying that to get it all home quietly under the guise of potential tariffs, playing this spread between London and New York profit? Or is it something much bigger? Is it what Scott Bessent is talking about, to monetize the balance sheet? Is it what Judy Shelton is talking about, to issue treasuries collared to gold? Well, if the gold isn't there, how do you get it? Oh, I know. Here it is. And so I would simply say everything inside of me is screaming.
Yeah.
This is a whole hell of a lot bigger than just Trump tariffs. I mean, Luke is one of the smartest guys on the planet.
Yeah.
No question. The dude is outrageously brilliant. And in essence, what he's saying is gold would need to be 12,600 to get to that. Well, and, James Rickard says 24,000. James Sinclair said 10,000. Now, these are all numbers that would require some form of a revaluation. If we just looked at history as an example, the last 25 years, gold has averaged 9.9% per year on average. It was up 30% last year. It's up way over that just in the few months. So to put a number on it would be nothing other than guessing, because there's so many things that could change that. An easy answer would be 10% higher. That's what it's average on par, on average, for 30 years. But I have a feeling something big is happening. And I will tell you, in 35 years of doing this, Jeremy, I've never seen anything like what's happening right now. Never.
AndySchectman discusses the global gold market, noting that the BRICS nations have led the charge in gold accumulation. As the largest producer of gold, China has been strategic in its approach, thinking in terms of decades rather than days. Another game changer for gold investment has emerged, as AndySchectman notes that China's insurance industry can now invest 1% of its $4.3 trillion assets in gold. Demand for gold could be driven further by a pilot program in China that allows the country's insurers to buy gold for the first time. Bloomberg cites Minsheng Securities Company's estimate that this could add approximately $27 billion worth of new gold demand into the market. Furthermore, Schectman observes that, in response to the BRICS nations' aggressive gold accumulation, the U.S. has been scrambling to keep pace, with substantial gold imports flooding into the country.
I mean, you could argue for the last several years that it's been China and the BRICS nations who have certainly gotten out to a massive head start. And maybe that's why you're seeing such enormous amounts. I mean, Trump doesn't do anything small now, does he? And maybe that's why you're seeing such an enormous race since November. I mean, if they took a look and said, do you understand what Trump was talking about, the BRICS and losing the world reserve status on his campaign trail, and said this would be worse than any lost war? And he's right. And he saw what they were doing. And maybe that's why he brought in Scott Bessent, whose largest holding is gold. And maybe that's why since November, not since he took office, but since November, the insiders were alerted and start repatriating their gold. I mean, we have a long way to catch up, but I would argue that in my mind, look, the Chinese are the largest producers of gold in the world, pretty dang close to the largest producers of silver also. It's arguable our first or second. They're net importers of both. They hardly sell an ounce ever. They became net importers of silver recently. They were net exporters. They're flying around the world buying doré and concentrate. They're buying up with their Belt Road Initiative. All of the countries that they're associating with are massively resource rich and underdeveloped. So they help them build roads and bridges and maritime channels and railroads and gold and silver mines and refineries for a piece of it, and industrialize their countries and bring those resources to the market. They get a piece of it. They understand. You see, the difference is the Chinese think in terms of decades, we think in terms of days, and that's a problem. They have been very methodical in their accumulation and in their production, and their numbers stood at 1,200 tons half of my career, and everyone said I call BS. That's not true. They never update their numbers. Everyone always said you can't believe the numbers that they say. They have way more. If you just take the 300 to 500 metric tons a year since 2000 that they've been mining, they have way more than. Well, your point to China, their insurance industry is allowing them to put 1% of their $4.3 trillion insurance industry, which is $43 billion, into gold investments. I mean, that's not chump change. We just saw Indonesia become a full member of the BRICS, which has the largest in-ground hoard of nickel on the planet. Their president, Widodo, has called for an OPEC-style cartel of rare earths. Over 25 countries or so have formally applied. Look, what happened to the BRICS? So for 4 years, the BIS Innovation Hub had said that, we're going to help develop Enbridge with China, Hong Kong, Thailand, the United Arab Emirates. And for 4 years, they worked on developing it. And Enbridge is the cross-border payment system that's operational. And it's mostly Chinese technology. But it enables countries to trade central bank digital currencies across the bridge unaffected by SWIFT. It would allow them to have full autonomy of trading with one another without having to go through the SWIFT intermediary system, without having the risk of sanctions. And in fact, there were 2 trades done in 2023, both of them using digital yuan with the United Arab Emirates, one buying gold, one buying oil. It works. And then, as I mentioned, Dilma Rousseff came out, not in the meeting in Kazan, but the one before that in Novigrad. And she said, look, I had a meeting on the sideline with Putin and what's his name? Let me just have it. Sergei Glaziev, who is the architect of all this, and said, we've agreed in principle to a new settlement currency traded over Enbridge called the unit, not a common currency, but a settlement currency. 40% gold back, 60% BRICS plus countries. And then at the 12th hour, right at the meeting, basically in Kazan, the big one, well, the BIS comes out, this moron named Augustus Carstens, the general director, who's on his way out. He says, the BIS has decided we can't be a part of any project where one of the members is being sanctioned by the West. Really, Augustus? So you're telling me over the last 4 years you didn't realize that Russia was the R in BRICS? So they more or less developed the technology, got them to the finish line, and then said, nope, we're out, and pulled out, which is really dirty. And that's a Western institution. And I think it crystallized their distrust in the West. I think it will crystallize more countries, a rallying cry wanting to join the BRICS. And they've changed the name of it from Enbridge to the bridge. And they'll continue to de-dollarize, trade in local currencies, and settle any imbalances in gold until they come out with a formal settlement currency, not a full currency, but a trade settlement currency.
With all of the factors that historically drive the price of gold prevalent now, there's a high likelihood that the metal's price will continue its upward movement in 2025. As the nations continue to accumulate gold and the U.S. scrambles to catch up, one question remains. Will the price of gold reach unprecedented heights, and what will be the implications for the global economy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.